This is Eric Muathe with Muathe.com. It is the last trading day for February 2020, today being February 28th. And we are seeing yet another down day, but the market is off the lows of the session. It was down about 1100 points about 2-3 hours ago and now bouncing. Now, what I wanted to discuss in this video is actually the VIX. Right now we are seeing the VIX trading at about 45. What that means is that when you have an elevated VIX and the VIX is above the mid-teens, remember it's trading at 45, but anything above the mid-teens, in the 20s and above, can be suggestive of a market that is more sensitive to small time frames. What do I mean by that? What I mean by that is right now we take a look at the market, again coming off the lows of the day, down only about 450 points on the Dow. S&P 500 down only 35 points as of right now. And again, when the VIX is this high, the small time frames become controlling. And what I mean by that is take a look at this simple 5-minute chart where we can see the S&P 500, and I'm using RSI set at 21. And the reason why it's set at 21 is so as to remove as much of the noise as possible. Now what we see here is we have an area where the market gave us a line connecting the highs there and these two highs here and here. Now we can see we generate a line from there, and notice how the market has been responding to this line, and every one of these resistance levels on the 5-minute chart has led to about 1,000-point drop on the Dow intraday. And we can see here again also as of yesterday at the highs of the session, when the market was up 400 points. Right here the Dow was up 400 points at the highs of yesterday's session and would go on to close minus 1100 and change. In other words, this seemingly innocent resistance led to almost a 1,500-point drop on the Dow from the highs of the session to the close yesterday. In other words, the small time frames are controlling this market, and right now we can see the market is coming at the highs of the session. We've tagged this once before today. Market was rejected here, and now it is back to that blue line. So we can see here and surmise that if the market is to recover, it needs to clear this blue line. Otherwise, resistance on that line again might suggest this is where the market stalls intraday, and we see a strong close into the end of the session, end of the week, end of the day, end of the month, which is here in the next couple of hours. It is important to understand that when the market bounces, it's also going to be bouncing up in the 1,000-point range gain per day, or at least on a daily basis, or on the day it bounces. 1,000 plus, maybe even 2,000-point gain is very possible as the market tries to recover this huge point loss it's seen over the last 2 weeks. So understand, with an elevated VIX, even the bounce is going to be of substantial size. Now, to put things in perspective, let's go back to February 12th, and this is the Dow daily, February 12th, where the Dow recorded its all-time daily closing high. We can see here that on the day it did so, the Dow was up 275 points. Now, that was on the way up. Right now, what we are seeing the market is gaining 300 points every 20 minutes, gaining or losing, plus or minus 300 points easily every 20 or 30 minutes over the last week or so. This is as a consequence of a very high VIX. Again, the small time frames become controlling with big moves either up or down. And then there's also the other aspect of a down market. Here is the lows of 2019. It took the market almost 9 months to build to this all-time highs here. So 9 months of hard work, choppy, but 9 months to move from these lows here to the all-time highs. In comparison, the market has taken barely 2 weeks. To give back all those gains. And that is what we call staircase up, elevator down, aka staircase up, elevator down. Those who are trying to catch a bounce right now are not understanding how the market operates here, where the RSI is trading. And also, if we take a look at the weekly, feel free to join me this weekend. Become a paid subscriber if you're not to my service, and I'll have a in-depth world market analysis. Because all markets are down this week, I'll be discussing how markets are responding to some level. In other words, the market has gone back to 2016 lows from a psychological standpoint, and I'll show you how that relates to the current market as we go forward. So again, this is a teaser. If you want to see my latest market analysis, do take a look at this weekend's market analysis video as we conclude the month of February 2020 and go into a new month. This is Eric Muathe with Muathe.com. As always, good luck, peace, and blessings. EACS.